Hi, everybody. It's Jean Paul, certified tax coach and enrolled agent. Get to the beginning of my presentation here. Today is about common tax errors that can be costly for your business if you own a small business. A lot of you business owners like to do it yourself. Are you one of those DIY guys or gals? That often means that you're wearing lots of hats. You're the boss, you're an employee. And when tax season comes, there's a real temptation for you to go ahead and wear your tax hat, not really having the experience to do so, but you just need to get it done and tick that box and move on and get it out of your mind. But accidentally failing to comply with tax laws or violating tax codes, or you might omit a form of or schedule that you didn't even know you were required to do, some sort of election if you're taking some particular deduction. Maybe you filled out the form incorrectly, and it can leave you and your business open to some possible penalties and interest. Sometimes not knowing what you should know can get you in tax trouble. As a business owner, oftentimes you're required to make estimated tax payments. This depends on your entity type. Assuming that you have to make them, you have to do this if you're expected to owe $1,000 or more at the time that your return is filed. So if you don't pay enough tax through withholding, let's say you have a wage job or your spouse has a wage job, but you don't pay any estimated taxes in for your business, you will end up owing more than $1,000 and you may be charged a penalty. This is where it would be important to work with a tax professional because they may be able to help you determine the projected amounts of the payment based on your good financial data in your file. These payments are due in April, July, October, and January. So for 2019, at the time of this filming, you would only have one more opportunity to make your estimated payment in a timely fashion. If you wait through, let's say you don't pay anything for the first 2 cycles and then you pay a bunch on the 4th one, while that's good because it reduces your liability at the end of the year, the IRS still does a look back per quarter, and so you might still be in a penalty or interest position for those periods when you didn't pay enough for that quarter. Payroll taxes are a whole nother animal. If you have employees, you're expected to deposit your taxes, the taxes that are withheld, and plus your share, the employer's share of the taxes, and you have to do that electronically. If those taxes are not deposited correctly or on time, the business owner may be charged a penalty. You'll certainly get a letter from the IRS letting you know that you didn't make your deposit in a timely fashion. If possible, never get behind on your payroll taxes. The IRS gets really serious because these are considered trust funds. It's not really your money. It's money that you've withheld on behalf of your client and behalf of the business that needs to be forwarded to the IRS on at least a monthly basis, sometimes more depending on your deposit schedule. So, and these funds, if for some reason the business goes out of business and you still owe these, you could be held personally responsible for them. These amounts are very difficult to get compromised. You hear that on the radio. Hey, if you owe $10,000 or more in back taxes, well, if they're trust funds, it's much more difficult to get those amounts reduced and or discharged in bankruptcy. So they basically follow you around for your life. So if at all possible, don't get behind on those. And this is where it might be worthwhile for you to consider working with a payroll service provider, and that makes sure your payroll is done, your taxes are paid on time, and it really lifts that responsibility and risk from you so that you can go about doing the things that you know how to do, which is run your business. Due dates, just like individual returns, business tax returns have to be filed in a timely manner, and there are multiple entity types that have multiple due dates. So work with your tax professional to really understand what your due date is and the filing requirements of your business entity type or types. LLCs, often people get created an LLC, and that is a disregarded entity by the Internal Revenue Service. So what does that mean? That means they don't recognize an LLC for taxation purposes, and you default to a sole proprietor, which goes on your 1040, unless you declare otherwise through the proper forms with the IRS. And I just worked with a client who had an LLC. She didn't realize, she thought it had a standalone separate filing requirement, and she didn't know when that was. And so they went ahead and filed their 1040, and now I'm doing an amendment because she really is a sole proprietor and those should have been included. So really have a good understanding of what your filing requirements are. Separating business and personal expenses is extremely important when you have a business. It can be tempting to use just one credit card for all your expenses, especially if you're a sole proprietor. Sometimes people like the free points or they get miles, and so they want to rack up as much spending as possible, but it's just not a good idea. It really should be separated. It makes it hard to tell the legitimate business expenses for personal ones, and it might lead to errors when you're claiming deductions, and it certainly would become a problem if you were audited. If you have accounting support, keep in mind that if you do this kind of spending, whoever you're paying is doing your personal checkbook basically and driving up those costs. And other entities can be affected as well. You don't want to pierce the veil. That is a common term that's used where it's trying to say that you are a standalone entity as a business, and the separation between you and the business needs to be clear from a legal standpoint, from a taxation standpoint. And when you mix and match and don't behave like a business, that puts you in some sort of jeopardy. So if you feel like as a business owner that you pay a lot of taxes, it's not in your head. The average business owner pays almost 40% in combined taxes. Those could be property taxes, excise taxes, income taxes, payroll taxes, self-employment tax. I mean, the list goes on and on, as you well know. So it is a big part of your business financially, and it just takes up a lot of brain space to make sure that you're compliant in all these areas. One way to kind of alleviate that is if you want to make more money and pay less tax by taking advantage of IRS approved and court tested tax laws, that can reduce your risk, then you can be looking at an advanced tax strategy. So I structure the ideas that I get from you into a plan of action. And then there's a team of professionals that I bring alongside with your permission that you can trust. And then you can get the best advice for the development of your proactive tax plan. I can likely tell you in 30 minutes or less how much investing in a proactive tax strategy can save you. I do that by looking at your tax returns, if you have a business and a personal that are separate, or just the business. And you're welcome to contact me if that's something you're interested in. So I would just really urge you, if not me, find a professional credentialed tax preparer. I know it seems like it's an expense that you can live without, but it will really, in the long run, save you time and stress. You'll have one less role in your business, and you can concentrate on what you think is important. And it shifts some of that risk away from you as a inexperienced person trying to do something that is so important and compliance related. So I will put a link in the description. I have a video on how to fire your tax preparer if you're already working with somebody and you just you're not happy with the service. You should probably consider changing. And then also what to look for when you are deciding to move or engage a tax preparer. So if you're interested in me looking at your tax return to see if there's what your savings could be and what the investment would be, you certainly can contact me for a free 30-minute tax discovery session. And there's my phone number and my email. You can also go to my website at totaltax.pro, and there's more information about me and about tax strategy as a subject, as well as places to upload your tax return if you want to go to that level. Hope this was helpful for you, and we'll see you next time.